Hey, this is Justin with DayTradeTheMarkets.com. I'm doing this video actually on Sunday, April 14th. I want to talk about a trade that I looked at on early Friday morning. I should say, accurately, a trade that I tried to get into and just missed. I want to talk about that, why I decided to get in or try to get in where I did, and then what I did about it and how I think it can be a really good lesson. It's been one of the lessons that's been hardest for me to come by over my time in trading, and hopefully you can find it helpful as well. So the trade that I attempted to take was a short right here on this tick exactly at 84.25, and I didn't get filled. So I was trying to get short right there, didn't get filled. I didn't chase it, but I want to talk a little bit again about why I decided to take it, why I didn't chase after it, and kind of how I came to that determination. Not because I'm the world's greatest trader by any means, just because it's taken me a while to get to a point where I really kind of understand these concepts within my trading plan, and I think the same type of decision making and thought process can possibly be helpful to you as well. So what I'm going to do here is actually kind of take this back in time, so we're kind of looking at what I was seeing at the time. Now we know at this point that it did end up selling off and got through this next support zone after bouncing a point or two, and then going and making new lows. But at the time, obviously, we didn't know that. So let me kind of run this back. So just to give a little bit of background heading into this, we like to look at some bigger picture analysis, and you can either look at the report we do each night in our member center, or we look at some longer term charts. I won't get into all that, but needless to say, bigger picture, our bias was up. So all things equal, we would rather be on the long side, and it goes without much surprise as we're near all-time highs day after day. Also, then we look at some bigger picture levels, and this 86 to 86.75 or so area was kind of an area we wanted to monitor. That was our next target up on Thursday, and we got above that Thursday, and we found some support there. But overnight in the news on Friday morning, we opened up below the 86. So that was kind of the first thing we wanted to watch, was how would the market react around this 86, 86.75. So that's why I have that blue dotted line drawn in there. Okay, you can see that we just kind of grinded along a little bit higher with some what we call level 1 bars, nothing too major there, and then decelerated and had a level 2, so strong selling aggression bar right near this 86 level. Okay, so that's telling us that, number one, we're back below that 86 level, and when we tested it, we actually got some pretty strong selling that came in. So that's telling us in the short term that, again, in the very short term, sellers are more in control of this market. Again, very short term. Now that is fighting the bigger picture, very strong up bias. Okay, so this is what we typically call a conflict situation, and you kind of have to, well, we feel like it's really important to put the market in context no matter what you're doing. And with that said, you know that if you're going to be on the short side, you need to be a little more risk averse, be a little more nimble in how you manage the trade, because again, you're swimming upstream against the bigger picture. Now that doesn't mean that you don't want to look at what's going on in the short term. It just means that you need to be aware of that. And obviously, if you're more of a bigger picture trader, then you're not going to try to fight that shorter term or that bigger picture bias, and you're just going to wait until the market gives you some buying evidence. If you're more of a shorter term trader, then you're going to really focus in on what's going on, minute by minute or whatever time frame that you're looking at. You could look at second by second if you want, if you're a very short term scalper, for example. So I just want to talk about that context idea. So what we had here was, the first piece of evidence we had was some strong selling that came in. It happened to come in around this level we were watching. So it's showing me that sellers are coming in short term. If I want to get on that, that's fine. I know I'm fighting the bigger picture bias. I need to be a little more careful. Then we get this high velocity move made by sellers, which is really confirming that as well. So when that comes in at this time, I've got a few choices. Number one, I can just get on board and sell at market. Okay, that would certainly be more aggressive. That's something I would consider if this was on the upside and we're with our bigger picture up bias. Again, we're fighting it, so I want to be a little more nimble. Another option is I can see if we get a little more action below it and then sell toward the low of this high velocity move box. What I decided to do was I was going to sell toward the high of this, because what I like to do, and this is kind of the key lesson that I am trying to get across here, is you want to weigh the opportunity by the risk, because like everything in trading, there is a trade-off. So if I'm going to get short here, okay, that means well, let me back up a little bit. What I always like to try to do when I get into a trade is determine what I would call my wrong point, or the area where the reason I got into the trade is not valid. It didn't hold. So I know, or I don't know, but my expectation is that the high of this high velocity move should act as resistance, especially because it just followed this, first bit of selling that came in. This should be resistance. So if this gets taken out by several ticks, 3, 4, 5 ticks, somewhere in here, I know that I'm wrong. In other words, the reason I thought about getting into the market, that selling was really coming in, isn't really holding if the market gets up here, and I'm wrong. Okay, so you don't want to get into a market and have your stop so tight that you can still technically be right, but you miss out on the move. Okay, so number one, define my wrong point. Okay, so I define my wrong point as, really what I do is I would put it above the high of the day and give myself the option that if this is taken out and we have some buying aggression, I'm just going to bail. But basically what I'm saying is I'd put my wrong point somewhere in here. Okay, so that's my wrong point. So now I have to ask myself, again, what's my risk versus my opportunity? If I feel my opportunity is great, then I'm willing to take on more risk, and I'm willing to get in down here or in here. Okay, but again, we're fighting the bigger picture bias, so I know that I want to be a little more nimble and I want to take on less risk. So instead of being more aggressive, and again, the trade-off here is if I'm more aggressive and I'm wrong, I have a bigger loss. Okay, the trade-off is if I choose to be more conservative and take less risk and get in up here, the trade-off is I might miss the trade, and that's what happened. Okay, so I decided to be a little more nimble, knowing that my wrong point somewhere in here, if I got in right in here, I'm only risking 1.5 or so. Okay, versus if I got in here and I'm risking 3. Okay, so I'm risking 1.5. I know that that's something I can live with. If I'm wrong, I know that I want to be a little more nimble, and I'm going to kind of reserve the right that if this doesn't go in my favor pretty quickly, I'm going to get out. Another way I like to talk about that is if I'm kind of against the grain or in a situation where I have to be a little more nimble, I want to make the market prove to me that I should stay in. Okay, prove to me that I should stay in if I'm fighting the bias a little bit. Now, if I'm with the bias, or things are really going my way, there's a lot of structure in my favor, I want the market to prove to me that I should be out. In other words, look to hold as long as possible and only get out if the market shows me some evidence that I should get out. Okay, so there are two different ways of looking at it depending on the context of the market. So if I were to get a long trade on this day, where heading into the day I'd rather be long, then I'm going to take the attitude that I want to hold this until the market actually shows me I need to get out. Now in this case, I'm taking a short against the bias, so if I'm in, as soon as I get in, I want to make the market prove to me that I should stay in. So I'm looking for a reason to get out, in other words, unless the market proves to me that I'm right and I should stay in the market. So hopefully that makes sense. So anyway, I decide to get in, put a limit order there at 84.25. And what happened is, if I roll this forward a little bit, right there at 84.25, price is hit, I don't get filled. So what do I do in that situation? I could chase after it. I could wait for it to come test again. What I decided to do is I'm going to just wait for it to see if I come here and get tested again. And if I miss it, I miss it. And what ended up happening is the market just took off, did bounce to the support level, didn't come back. I suppose I could have gotten in again toward the low of this high velocity move right in here. I could have taken a shot at it there, but again, my wrong point didn't change. My wrong point would still be up here, so I'd have to take on more risk, and I'm against the bigger picture bias. So again, when you think about weighing opportunity versus risk, in this case I wanted to take less risk because I felt like there was opportunity, there was edge, there just wasn't huge opportunity. So I missed the trade, and the thing ended up selling off pretty good until it kind of grinded higher later in the day. But I missed that trade, and so in the past that would have just made me fuming. I would have been so upset that I missed out on that opportunity. It's almost that missed opportunities were more bothersome to me than actual trading losses. So I know that I've matured as a trader because I just accepted it. I didn't force anything. I didn't get upset. I just said, okay. I stuck to my plan, which was to weigh risk versus opportunity. I knew that I would, because this was against the bigger picture bias, still a good setup. It's got a lot going for it. Filter, structure, resistance zone there. It's got a lot going for it. I didn't have to take much risk on that trade. So, to me, the opportunity was good enough to take minimal risk. I feel like I was right. I read the market correctly. It just didn't work out for me. But instead of letting that ruin my day, like I've done a lot in the past, instead of letting that ruin my day, instead of letting that cause me to take stupid trades later in the day, I just accepted it. I knew that I stuck to my plan. You can't have it both ways. You can't always get into every trade and have little risk. Okay, if you take little risk on a situation, you're going to miss out sometimes. And if you take a lot of risk in a certain situation, you're not going to miss out, but you're going to take a lot of bigger losses. So again, it's that trade-off and understanding that and being able to live with that and accept that based on the plan that you set out at that time. So again, I'm getting long-winded here, but the idea was I felt like the opportunity was decent, but not awesome. So I would be willing to take minimal risk. I didn't get filled, and I live with that because I executed my plan. Okay, so I guess that's the lesson I'm trying to point out. Not that I always do this perfectly every day. Not that I'm some wonderful trader. Not that I'm trying to brag. I hope it doesn't come across that way. I'm just trying to kind of talk about that decision-making process, because it's really about your process, your decision-making, way you go about making decisions, and certainly the better evidence that you have that you can use, that's going to help. But it's really about how you go about making decisions that determines how you're going to do in the long run in trading. So hopefully that's helpful. Hopefully that is something you can apply, so you can think about weighing the risk versus the opportunity in given situations, and then living with the result of that decision. So anyway, have a good rest of your weekend, or if you're seeing this Monday, have a good start to your week. And if you have any questions, let us know. We'll talk soon. Thanks.